morning, good afternoon, good evening, depending on what time of the day you're watching this. It is Sunday, July 30th. We're just coming on 7:30 in the morning over on the East Coast there. And since you guys are going to have a nice hot day once again, I will keep this as short as I can so that you can get outside, get some fresh air. 3 green weeks. The SPX has closed green 3 weeks in a row. Why is it significant? We'll show you in a minute. I'm going to retrace and go over where we're just come off of over the last week and then start to progress forward as we have a pretty big week ahead of us. And it all ends on Thursday after the market close. So 3 green weeks. Green for the month as well. The month of July started at 44.50. We are very much up there, 130 points above that. We have a 222-point range for the month so far, 31.95% from the October lows, almost 21% from the March bottom. Thursday, let me retrace you over here a little bit. I sent out the video on Sunday last week, and then seeing the way that futures were trading, seeing we were having a little bit of a gap up, I sent you out the email on Monday. We have a very suspicious bullish week. And I highlighted in there how there's a very good possibility that we'd be looking at that 46.05. We've got a big earnings week. We've got the big FOMC meeting. You have the email. There's no reason to go over it. FOMC meeting was on Wednesday. Little draggy, like we shared before. Not on this one, but over here on this one. Typically, we would get 50s, or not typically. The last two, we've only gotten 50s. Nothing over 60. And then we turn around and get a 35-point range on Wednesday. So, yeah, it was pretty shitty. And then we come out there on Thursday after the ECB raised their rates. We get up to 46.07. Everything is just trolling along, holding on that old resistance for support. And then you get that Nikkei news. And again, you remember my discussion about us closing below 45.66. We had already had 3 green days in a row. I was very confident. I'm sorry, that was on Wednesday. On this gap up, we talked about it filling that gap, going and filling that gap, 46.07. We threw out that alert over there on the SPY, going out 1 day so as not to be on a 0 DTE. And your 455 puts, which were for Friday, this being on Thursday. 10 lot, $290. You're sitting at over well over $3,000. These things come up when they come up. There's no advance notice to it 98% of the time. When they happen, they happen. And it's just a matter of, being there and available and being able to act on it without having to think too much. That's why when you're trading the short term, you're keeping it in a very, very low capital risk. And therefore, you can adjust yourself and be able to ride the ride as it takes place. So anyway, not to ponder on that too much. Again, 3 green weeks in a row. And the reason why I'll highlight it as we come over here is this is my president chart. Don't worry about the 34.48%. But tracking your 3 green weeks. And yes, you do get more than 3 green weeks, but more often than not, your 3 is your cap out, and you don't get a 4th or a 5th. Coming into recent time, just where we're at, we have not had more than 2 red weeks in a row. We've had 2 once, if I recall. In fact, I'll put it back here on the weekly. We had 2 over here back in May, and that was when we had all of our sell signals. Everything looked great. And it turned around and said, no, not going to happen. Show you that in a second as well. 5 green weeks. Now you've just had a 3rd green week. So the odds of a 4th green week are, I wouldn't even say 50-50. They're probably 35.65 that we could get another green week. Now, sticking with this as we are discussing it, I'll go on to the monthly. We are looking at 5 consecutive green months. And again, bringing it back to where we've come from, this over here being the beginning of January 2021, we had 1, 2, 3, 4, 5, 6, 7 green months, excuse me, as we went into that September high of 2021 before we got our dip in order to recirculate ourselves and get that health back with some technical setup and back up into the highs for that fifth wave. So we are running a little bit, on ether here, a little bit on FOMO, but it doesn't change where we're at. And I'll show you here as well, because you've got your full moon, which is coming up here in the next couple of days. I think it's tomorrow, Tuesday, the full moon. Full moons are fantastic. You can't throw them out. These need to be changed. Forget about those. Your full moon here in June or start of July proved to be a bottom, possibly a top, but then it proved to be the bottom. June, same thing, proved to be a bottom. May, same thing, proved to be a bottom. April, same thing. Had the chance on all 4 of these to have placed a top, just like you had here in February. No, placed a bottom. Very clear when we had these back here in the beginning of the year, over here in March, definitely bottoms. Same thing over here when we were over in November. Same exact thing that took place there in October on the bottom. Same in August on the top. Same in September on the top. These have been pretty tricky. And while they have been money, absolute money for years, they've just been a little bit tricky as we've been going into this recent few months where what looks to be good is definitely good, and then it turns around and it's no good. And that brings you into your VIX. Where I'm not going to spend too much time on this, but what I was mentioning there as we went into the weekend on Friday, we need a strong move down. And we did not get that on Friday. We don't get that tomorrow. Tomorrow morning, Monday, volatility window is closed yet again, and you will have absolutely no choice whatsoever but to sit back and wait until Thursday after the close, after you get reports from Apple and Amazon, and then we can see whether or not we are going to get a volatility spike. Volatility spike is required if we are going to get that move to the downside, which is needed and which has already been forecast for weeks, but we just aren't getting the follow through. Had this one move over here in the middle of July, this was where you proved to put your bottom, where your full moon comes out. And here we are right now, holding on this 1339. Possibilities, okay? Possibilities. Yellow, this was announced last week. Yellow Corp, the trucking company, they're filing for bankruptcy on Monday. Now, I'm not going to go into Twitter, but CNBC was actually talking about this on Friday, that there's been 300 plus bankruptcies filed this year, greater than any year going back for the last 15 years, going back to 2008. So, it's out there. And I shared over there in the room, which came out after the market closed on Friday. There's another bank which has failed, the fifth one of the year. Granted, it's a little baby bank, 139 million in assets, 130 million in deposits. They failed. They failed on Friday. They're being taken over. This is your 5th bank failure, but nobody really cares because everything, and I do mean everything, is going to be focused here on Thursday when Apple and Amazon report. You also have Coinbase, which is getting a lot of attention now. And we have AMD on Tuesday, and I'll go over these. PayPal, I love it. I love how it dropped to where it dropped to down at 62. Very good for a long. Where are we? The S&P. This is what we're looking at on the S&P for the year. I mean, it's pretty fucking clear where it's all at. It's all in the Nasdaq. Period. The end. All of it is inside the Nasdaq. It's the only thing you need to pay attention to. Now, what was shared with me is this is your performance year to date on the Dow Jones. And granted, we did just have that 13, 14-day rally, green closes, record breaker, Microsoft and Apple. And then you come over and look at the rest of the Dow Jones, and it is a complete piece of shit. CRM, sure. Intel, Boeing, went nowhere for months. Just had its breakout there the other day. So Microsoft and Apple, that's where it's all at. Microsoft, you've already had your report. Imad has been helping with some data that he's been sharing as far as that hack with the Chinese hack and how much it could cost them. And where we're sitting right now for the spreads is we are going into, and I'll count this with you, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 trading sessions without a minus 1% from the previous close visit. 16. Start counting. As for plus 1%, we did that on Tuesday or on Friday. We did break the lower safe edge there on Thursday, but we weren't trading the puts anyway because the trade has been consistent to be selling the calls when we're up at resistance. And unfortunately, like I've mentioned, because we have such a compressed VIX, if you are going to be paid adequately doing call spreads on the SPX, you are going to need to get close to that action. This is the reason why I've been sending out alerts like this QQQ. We've gone now 2 weeks through this QQQ. The first alert I sent out was at 750 and 7.25 when I got in. Then I sent out a second alert. It dropped down to 6. Last week, you had your spike all the way up to $10. Now it dropped down below 5 again, and I sent out the alert once again, and you had your spike up to above $9 when you had the big crash there on Thursday. Sent it out again here on Friday that it is below $5, $5.50. It's been working. It's got everything in there in the thread of that email as to why. So again, bringing you back into where the reality is, you need to be watching that QQQ. And where we go from here on the SPX, I'll show you very clearly. Thanksgiving. This is what we've been tracking here for the last 30 days. From 43.28, the 6.5% rally over 3 weeks. We broke minus 1% on that dip, but it was minus 1% from the high that was placed. We have not broken the prior day's close for 16 trading sessions. Now, I believe I'm on the right place to put up the QQQ. So yeah, we are. So here's our QQQ, and everything, like I keep saying, is inside the QQQ. Everything. You've seen the QQQ drop 2.5% the other day. The SPX didn't even drop 1% from the previous close. The reason why, you can sell this one off and you can rotate it into another index. That's exactly what we saw take place as it went over into the Dow. So here we are in the QQQ. We've got this one gap that's left to be filled up above. Okay, it's been sitting there for a couple of days now, since last week. One gap right up here, 384, 385. Now, 381 is what it needs to get below for the bears to have any kind of chance. 375 is what it needs to break for the bears to have any kind of confidence. And as we go into this week, the big one this week is going to be Apple. Okay, Apple's the big one. So while I haven't changed the all-time high retracements, they're not going to change by much. This is where you're trading at over here on Apple, well above your 50-day moving average. Now, to take this off, and I don't remember if it's email or clean. I believe it's email. Yeah, it is. Studies, edit studies. We're going to remove the 400 and the 100 and the 200. So you can see your 50-day just going straight up in the air. But what I'm looking at here more is technical. And you see your weekly got very overbought as we went into here. Same like you had gotten over here as we were heading into COVID. Same as you did over here as we were heading into September of 2020. Well, that's where we're at right here with the weekly. And on the daily, even so, it's just been not weak, but not strong. You peaked way back over here in the beginning, at the end of June, and it's just been flailing off. Now, realistically, okay, with all of these gaps that are here to be filled, and we'll remove the 50-day moving average, this is not going to eat it. It's just not going to happen. What you're looking at over here on Apple, nope, is it default? I know I had it, yeah. You've got this channel that you're trading here on Apple. And if you really wanted to look at this as a 1-2, you've hit your 161.8 fractionally. But there is a very, very good chance that you still have some higher highs that you can place on this. And your higher highs, moving it up, are right up around 210. So if you were going to play into Apple and you wanted to be involved in something on the long side, obviously 200 is going to be psychological. Very good opportunity that you could be looking at 210. On the downside, not seeing that you're going to be getting anything below there, that 185, 188 level. It's just not going to break down below that. So playing Apple, if you want to play a strangle, we can look at it a little bit closer as we get into the week. But even breaking the bottom of this channel down here around 190, it's going to be really hard to even fathom that taking place. 181, bare bottom on the drop. Worst case scenario if they do pull the plug. And they've missed earnings. Not missed, but they've been reporting declining revenue for 3 consecutive quarters. Yet here we are up at all-time highs with the same fucking phone that's been the same phone since the Apple iPhone 5. Whatever, man. Amazon not looking too shabby where it is, even though it cannot stay within 30% of its all-time highs, and it is at the 50 retracement from the drop down to the all-time highs. It's got a little bit of potential, a little bit, that you could be looking at something up around that 143 level. Now, bring it in here. You've got a nice little move over here on Amazon. It's holding this 123, 124 pretty strongly. The 135 break, and it should be pretty simple to get up there around 145. So, again, for the upside and how you're holding the 50-day moving average at the moment, I wouldn't take it out of question that we could get a view very similar to the view that you had here off of earnings and this view that you had off of earnings over here. No, bring you in. Big spike up, sell down. Big spike up, sell down. So if we were to get a big spike up there to that 145, I would find it very attractive to get into a short position on Amazon. It's been very consistent the way that it trades when it comes down to earnings. So one thing I will show you over here on Amazon, which is pretty fucking cool. This is the Amazon Weekly. Look at these green weeks, man. Just consistent green weeks as we climbed up and up and up. Green, 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 green. And right there at this 135, you can see it really clearly how that 135 is unbreakable. So, got earnings coming out on Thursday. We'll see what we get off of that. Next is your AMD. And AMD, same thing. 30% from the all-time highs over here at 115. Pretty significant little Fibonacci retracements start right underneath it around 109. 109 to around 102. You got some pretty strong Fibonacci's for support. Up above it at 126, 129, you've got some decent little attraction for some upside, but it is, again, we are trading below the 50-day moving average as we've been falling out since the NVIDIA spike going back a couple of weeks ago. Bring out here AMD clean and zoom you out for a wider picture of it. And here, what I'm showing here on the AMD is just very clean and very clear how you've got your resistance area right here, right above this 120. It had been resistance prior, had your little rally, and everybody became bag holders. And then as you were falling out over here into the April high or the end of March high, boom, you fell out behind it. This is your resistance area right here, this 120, 125. You've got your major support levels down here, down below 58, but you're not going to see that. You're not going to see that this year, so forget about it. But for what we are looking at here on AMD, and again, being very plausible and open-minded about what we've got, is we could see a move on AMD up to around that 145 area. If we were to see a move up to 145, that would be the area where I would be a little bit more aggressive about getting into a short position. How we're trading here over the last 3 weeks, going pretty much nowhere. I wouldn't jump on anything whatsoever. Nothing. This is there to be looked at, there to be watched, and after we get our earnings on Tuesday, then we can look at AMD and we can make a judgment call of it. So, again, brings you back over here to the QQQ. Everything is inside the QQQ. Everything. If we are due to get that spike in volatility, you will see QQQ below 381. If we are going to get a commitment in volatility, you will be looking at QQQ below 375. I've covered this already. You have 0 unfilled gaps to the upside other than this right here, which goes to 385.65. 0. Yes, we are 20, 25 points away from the all-time highs. Yes, we are going to be looking to go higher as we get a dip. But as for now, with the move that we've had from down here, off of the March lows up 36%, and coming off of that 259, 260 area at the beginning of the year, there is a graveyard of gaps to be filled, and what would be the most bearish bullish view would be to get a dip down below 345 into that 336, 337 area, not break down below the August highs, and then have the energy levels to go and progress higher. That's a wider view. As for right now, the only thing that anybody gives a shit about is what's been happening over the last 10 days. And while we do have this fake print, which I will not remove, we are using that 384.28 very strongly for resistance. So I would continue to use that as an area where I would be shopping for anything on the short side going out 1, 3, 6 months, because pricing is cheap and you will get a much better rate of return and risk reward than going over there and trying to play the SPX spreads when you've got a 13 VIX and you got to get close to the price action. And you have to sit there and watch it. So I look forward to having a pretty decent week. I don't think that we're going to have too many surprises as we go into the beginning of the week. Obviously, we've got that bank failure, and we also have that yellow, but they're pretty absorbed, I would say. Little bit of news from Japan, which is now a sleeping giant after what they did. We don't have anything on the U.S. on Monday. Nothing. We got some Eurozone CPI. August 1, again, nothing. We get some S&P PMI numbers, which are all fudged anyway, and then we start getting some Fed speakers. Wednesday, nothing. Thursday, nothing. And then we get the jobs report coming out on Friday. So everything really does roll down into Thursday. Thursday this week, after the market close, when Amazon and Apple have reported. So on the indexes themselves, it should not be an exciting week. And Thursday will answer all of those questions. So individually, as most of you already know, I have every one of these names already charted, every one of them. Feel free to send me a message in the chat room, one of them that you're looking at, one of them that you're interested in. Be more than happy to not only share the chart, but share my view and start shopping for some options and looking at the pricing, seeing if it's worth taking a trade. Have a great weekend. Have a great Sunday. As long as there's no significant changes overnight, we'll see and put a very condensed video together for Monday morning. Have a good one.